Hi everyone, and welcome to another live stream for Thursday. I'd like to welcome you all here, and thanks for tuning in. Some of you may know us already, but those who don't, I'm Scott and this is Roger.
Hey guys.
And today's a little bit of a special one because we've got a guest here. So I'd like to introduce Tony from AV Chartered Accountants and welcome you here tonight as well.
Pleasure to be here.
Yeah, welcome Tony.
And so tonight is a little bit different in the sense that we thought we'd bring Tony in to ask all the nitty-gritty questions and get down to what does a property advisor do, and I guess some of the things that we do. So Tony, I'll hand it over to you.
I'll be the arm's length person asking all the questions, so we'll clear our minds. There's no such thing as a dumb question. It's a pleasure to be here because it's a very, from where I sit as an accountant, it's a very very intriguing proposition. So I guess the first question is what is we're getting into a lift. You've heard of the elevator pitch. Pretend we're stepping into a lift. What's your elevator pitch? What does a property advisor do?
Yeah, look, it's a question we often get asked, and when people say to you, "What do you do?" and you sometimes think, "Oh, what do I do again?" But I think the thing that we do is we actually help people get into property investment the right way, Tony. And I guess that's making sure that we've dotted all the I's and crossed all the T's. And there's a little fair bit involved in that, So it's helping people select the options, make sure they're the right options for them, and that it's tailored for their lifestyle, their income, etc., etc. So,
how many different people do you speak to in that whole process?
Well, there's, as far as different professionals, you mean? Yeah, there's probably 5 or 6 depending on what the actual investment is. So,
do you want to run through what they are?
Yeah, look, we would people like yourselves, such as accountants, to do with structure on the investment itself. We'd talk to financial planners in our group and also mortgage brokers, property managers, solicitors, quantity surveyors, so that there's quite a range of different professionals that are specific to their areas, that we utilise.
So you're in the middle of all of these people?
Yeah, that's right. So we sort of control the whole show, but help bring in the professionals where we aren't the professionals and we need their assistance to guide them in their licensing.
So most people know what a real estate agent is and what they do. Some people know what a buyer's agent is and what they do. So how are you guys different from what those guys do in their roles and their professions?
Yeah, sure. So look, I guess from a real estate perspective, an agent basically acts for the seller and is purely just selling homes. So for us, it's about helping a client purchase an investment. In terms of a buyer's agent, they generally work with, first home buyers or homeowners or investors. For us on our side, we purely work with just investors. So someone looking to buy an investment property, build a portfolio over time. We really just specialise in that niche for them.
Yep. I actually noticed your logo, you've got the word investment up in bold compared to the other one. So that highlights in your branding that you do focus on investment. You're not there just to buy and sell and flip. You're not interested in the people that are in there for 6 months, 12 months. You really so is there a time frame that you're doing this over? You're trying to say to people, hang on to it for 2 years, 5 years, 10 years? What is there an ideal time frame?
There's multiple answers to that question, but it's a really good question. The thing is, it comes back to suiting the individual. So if they're late 40s or early 50s, then the time frame's somewhat limited by how long they're going to be working for. If they're in their 30s, then that can be a different time frame as well. But definitely, you wouldn't look at buying something to then resell it within 5 years, 10 years. You want at least one complete cycle of the market to help with the growth.
Yep. So tell me about the properties that you source. Is there an ideal property? Are they new? Are they old to be done up? Are they in specific areas? Are they under the waterline in Queensland? What sort of when the tide comes out?
Yeah,
I've seen those before. What's the ideal property?
Yeah, look, I think that the ideal property, I guess, comes back to what Roger just touched on a couple of minutes ago. It's about what's right for the customer. So I guess for some people, they can only afford to get into an apartment. It's always better to do something than nothing. For other people, they are able to get into a house. For some, they may be restricted and it can only be a townhouse. But it's better to get into the townhouse and use that as the value goes up as a stepping stone to get into the house. Correct. So I guess the right property is the one that's right for that customer's situation. And in terms of age, goals. So we really look at the customer's age and goals and needs first, and then the property comes second. So to answer the question, I guess it really depends on you and your situation.
And part of the process is you do some sort of a fact find to try and marry up the right person with the right property.
Correct.
So that you get it right. Yeah.
So and it can depend on the property, because if they're a different age, if they're a younger couple, then you can go for something that's got longer term growth potential. If it's somebody that's an older couple, then you might be looking for something that's just on the verge of really taking off, and even if they had to pay a little bit more, for example, for it. So
wonderful.
So just horses for courses.
Yeah, that's it. All right. Well, let's reverse it now. Let's look at your ideal client, your customer. So clearly, I'm sensing that you get a lot of your clients from referrals and whatever. So paint us a picture of the ideal client that would come in and use your services.
So I mean, I think the ideal client for us is basically someone who wants to get ahead and better themselves. So some people that we come across on a daily basis are in a position to do something now. Some may not be in a position to do something now, but we're able to, I guess, set them on a direction that instead of waiting maybe 2, 3 or 4 years, that they could get there in 12 months. But I guess having the right mindset and wanting to better themselves financially is an ideal client for us.
So the age group doesn't really, it's just that mindset more than anything else.
It's typically sort of 25 to 55. The younger age group is becoming more and more predominant, we're finding, where they get a help from their parents or their family to get them started, and they don't want to be working when they look as old as me, Tony, so...
We'll come back to that.
Yeah.
You may have noticed a cake on there. We'll refer back to that. It's an interesting demographic, because, again, from where I sit, I don't have anything against the younger people. A lot of those young guys don't seem to have a lot of money because they're probably coming out of university. They've got a high help debt. They've already got a lot of debts that they're trying to pay off. So they don't have a lot of disposable income. So I actually would have thought it was at the other end, where someone wakes up and they might be 40 and they realise they don't have any superannuation, and they realise I better start doing something with my life. So do you get them at both ends at the scales when they wake up with that sort of revelation?
We do. Yeah.
I guess there's a bit of a mix there, because we are seeing, which is quite nice for a change and refreshing, a lot of younger people coming into the mix that are in their mid to late 20s, and it's because they're adapting the I don't want to work forever I guess analogy. So there's a lot of young people we're finding are learning this sort of stuff that we're teaching our clients off their parents, and they're getting started earlier. But we're also seeing an influx now of a lot of people, COVID, the GFC, we're having to work longer, going, well, I thought my super was the big pot of gold at the end of the rainbow. It's this. So we are seeing a lot of people, I guess, saying we need to get serious finally, because time is running out. So
I'm not a financial planner, and I don't have anything against financial planners, but do you come at loggerheads with that industry at all, where they have a tendency to try and get people just to put cash into super and versus using the money before it goes in to buy properties? Do you have any sort of bit of tug of war between that sort of industry to say?
Yes and no. I mean, I think we work in close proximity with a financial planner in separate licences, obviously, but we have financial planners that assist people getting into property in superannuation funds, SMSFs. And then they use a portion of that, the leftover money, and they'll invest that in shares and managed funds, etc., to help grow that bit, to maybe lump sum onto the debt of the property. So you can work quite well with them. There is financial planners that will try and put people just into shares and stuff, and that's okay. That's not, we're not in war against them. We have different licenses, and so we just use the best of both worlds, I guess. Add the financial planner to help fix that part of it, and together we work with the client to get them the best outcome using all of those different entities. So.
Yeah, and I guess, again, from where I sit, some professions tend to forget that it's we've all got to act in the best interest of the client and not ourselves. I want to talk to you about the rental side of things, because these investments, the rent is the first thing that people really sign up for, because that starts to pay the bills. And some of the horror stories that I've seen are that some of these people have bought. Some investors have bought properties, they've been promised a rental figure, and then all of a sudden, when the property settles, it's empty for 6 months, and then they're told, look, we've got to drop the price and the rent, and next thing you know, they're having to reassess things. So tell us about some horror stories or some how do you fix that type of scenario? How do you make sure that if you tell a client that they're going to get $500 a week in rent, that they're going to get 500, that they don't have to then drop it to 300 just to get a tenant in?
And look, I think that's a great question, and we often hear about this in what we call our initial meeting. That's where we tell the customer a bit about what we do and find out about them, and often we hear, friends or family in a horror story, so to speak. But I guess for us it's pretty simple. We already do all the research and due diligence. We know the area. We've already got customers in that area. We know what those customers are getting.
Yes.
So if a new customer comes along, we know down to a T what that figure may be.
Yeah.
Property managers too in the area, Scott, we have, don't we? So we know what the rentals are. We've often got clients already in the area too. So from pre-experience. Sorry.
But I guess we're quite conservative in that sense too, Tony, that if we're looking at a property for a customer and we know that it's $500 a week rent, the numbers that we would do, it's probably for another segment, but generally would be at, say, the 450 level or 420.
Yeah. So you do factor
so we factor that
correct. And we'll do like an automatic 2-week vacancy rate when we're giving them the numbers on what the property could cost, so that we've built that in.
Yeah.
And we're looking before, as soon as practical completion comes, we're looking 2 weeks out, 3 weeks out for tenants. So there's some of the ways that we
a lot of comfort.
And if worst comes to worst, and this is when the stuff hits you, you got to know what to do next. Then you wait a week, drop the rent by $10. Wait another week, drop it. So that's your fallback. You're very large. So you're not going to be a 6-month scenario.
Yeah, that's it. No, as I said, I've heard some horror stories. So
there are.
It's a niche. All right. Well, I guess I'll save this question till last, unless there's other questions that'll crop up later from some people watching. But how do you guys get paid? What's the flow of money? How do you guys get remunerated for what you do?
So look, that's a great question. I mean, we certainly can't do this for free, just like you can't do what you do for free. But the easiest way on how we get paid is we get paid by the seller of the property.
Right.
So whether it's yourself, if you had the property that our client would need, you would pay us a fee in that regard. So our clients don't pay us a fee. We hope that if we can blow them away with service and what we've done for them and work with them long term, that they will reward us by telling family and friends. And that's where most of our business comes from, word of mouth and repeat customers coming back and back again. So the customer doesn't pay us.
So it's the seller that pays us the fee.
So who's your seller then? So you've got a combination of, say, developers or people doing little subdivisions on the side and things like that?
Yeah, we're not. We can choose whoever we want. We get to the best areas, and then we go to the best builders / developers / investors in that area that have got product, etc., that we think can be really suitable for the clients. So we're not aligned to any particular group. We can choose whatever group we want. They're the ones who actually pay.
Yeah, and just again, I thought another one, just to drill down on that. So how do you then make sure that your client is not paying overs right from day one? So they're not, and again, I've seen some horror stories where they've bought properties $600,000 off the plan, and the bank turn around and say, "Oh, this is only worth $500,000," and they recalculate everything and say, "By the way, you're going to have to stump up some extra money." How do you make sure that value, that settlement price is market value?
It's going to be fair. there. Yeah, and look, that's a common question, a common problem we find with a lot of people. I guess it comes down to experience and knowledge. And again, we know the areas inside out. We know what properties are worth or what that area demands. A lot of the time, we will get valuations done up front versus some will get them done through the process. So we're not getting through the process and the client's getting caught or any of those shortages where other people may have that. But I think it's having that understanding, having that sort of system in place that allows it to just work like clockwork, so to speak.
And we're also, we're independent enough to be able to say, all right, well, if that's not the value that is perceived, then we'll come to an arrangement with the builder or developer and make it better, if you like. So,
well, I'm not trying to put words in your mouth. I could just see an issue where your client won't come back to you if all of a sudden, if they've got a bad experience and paid overs, they won't get. So you clearly want them to keep coming back and looking at the second and third property. So
that's right.
If the first one's a bad experience, you're not going to get.
Well, that's the thing is to make it a good experience, we have to make sure the experience with the accountant, with the mortgage broker, the financial planner, the property manager, the quantity surveyor, and the solicitor are a good experience as well as our experience. So that makes sure that we're on our toes all the way through. So.
we were talking before we went live. One of the things that is a challenge in our industry is that it's always horse before the cart. So I'll get a panic phone call from a client saying, I've just gone to an auction on the weekend, I bought a property, I need my financials, I need to get to the bank. So you guys do it the other way around, where you actually get all this information, go to a broker, find out their borrowing capacity, see how much they can borrow, and then go and find the property. I'm always in the complete opposite, where we are chasing our tails trying to get financials done to be able to feed the banks and brokers. So I guess my question around that is, how have you found dealing with brokers and the banks since the Royal Commission, where things have become a lot tighter, a lot harder to borrow money?
Yeah, it's probably experience with the brokers that we network with, is that they're usually 20, 30 years in the system, and to them it's just like, it's got to put another coat on because it's a bit colder. It's been changing for years. It's just another slight change, and they adjust to it. They're like a chameleon. They adjust to the situation. They feed us that information, and they tell us what to wane away from, etc. And we're getting constant reports from them even before we look at the properties. So that helps us stay away from stuff we don't really want, Scott, doesn't it? So, and it also helps guide us on whether to be conservative and not give the option of being able to borrow 500 if they can only do 420 in reality. So just conservatism is sometimes painful, but it's better to find out before we present than find out afterwards. So
it's baby steps. I remember my first house cost $75,000, and then we moved up to the next one, and I think there's a little bit of in some, I won't say in some generations, that they just want to walk into the $2.7 million property straight out of home, and they get a rude shock that they can't borrow that much money. All right, I think that's about it. Do we have any questions that have come through? I don't think there's anything. I think we've covered pretty much most. Is there anything that you guys? Was there any question that I haven't asked that I should have asked?
No, I mean, I think you covered it pretty well. I suppose the biggest point I want to stress to all the viewers or anyone is that there was something you touched on a couple of minutes ago about how we do things back to front. And I guess the thing there is a lot of people just think about property and they tend to forget about themselves or their situation. So, it's very, very important when you're buying an investment property or thinking about it that you actually start from yourself first, your goals, your needs, where you're trying to head, and then match the property to it versus rushing out and trying to buy the property. It's very important to think about yourself as the first step, I guess.
Take a breath.
And time is the most critical thing. So we find that the reason that most people don't do this is because they don't find the time to set it aside to even start the process. Like I don't know anybody who has parents that had bought a property that is now worth less than what they paid for it. I don't know anybody.
Well, I often talk about this, and to me it's around population growth. If you can convince me that an area is going to decrease in population, then property prices are going to drop. But whilst there's population growth, to me the demand is just going to keep going through the roof. One final comment I did want to make is that it seems to me, and again I don't want to put words in your mouth, but it seems to me that you guys have got this terrific niche business where you are catering for people who are time poor, and you're doing a lot of the running around and facilitating of all those people finding the property, dealing with the brokers, because the world we live in now, we are so time poor. Everyone's working long hours with kids and running around. Weekends are full. It just seems that you're taking all that stress away and just presenting them with a solution. You're making a lot of those problems going away. So from what I've seen, it just seems to be a very, very terrific little niche market. And I think that's about it. So thanks, Scott. Thanks, Roger. Thanks, everyone, for joining us. And looks like we'll be back in 3 weeks' time. Been an absolute pleasure. I've learned a lot myself. And check out the website, piaproperty.com.au, and we'll see you in 3 weeks. Thanks, everyone.
Thanks, guys.
Thank you.